Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over ratios. We're going to do ratios for a commodity bull market, see what's going on, check out some of the commodities, look at pricing across the entire area, look at the ratios, see how they're moving against each other, and we'll go over and through all that to see how the commodity bull market is developing and transpiring. So let's dive in. Again, this is just my financial opinion. I'm just going to start with the dollar, the 10-year yield. These are important. The dollar does look a little bit weaker. Why do I say that? We got big selling pressure, smaller buying pressure this entire move here. So I do think it may eventually work its way lower. Now, even if I'm wrong, there's so much inflation out there that commodities are still viewed as a safe haven. At least that's my opinion. TNX is another one, up 2.15%. This moving higher, general trend higher, is putting pressure on bonds to sell off. It is also creating an inverted yield curve where short-term bondholders are less likely to buy, and the long-term bondholders are less likely to sell. So what you get is an inverted yield curve, which is an indication of the market environment that we are in. High inflationary periods have inverted yield curves. And I will talk about that in another clip. It's not that the curve inverts that's the problem. It's when the curve uninverts and starts going back up. And I'll get into that in a whole different clip. Looking at this is just the commodity CRB index priced in dollars. We've had a massive run here. We got a little bloody nose there from today because it's a monthly candlestick. That's the weeklies there. It looks like we could be developing a little pattern here where maybe we kind of create a pattern like that, a flag pattern, where we get nice little back and forths, and then we break again and move on higher. Yeah, that's what it looks like to me. And we've got gold moving sideways, silver moving sideways, and platinum moving sideways. I do like platinum though. Platinum is the one I like. I'm going to go down here to the ratios. Looking at the ratios when I get there. Okay, here we go. CRB index to the S&P 500. Again, we can see that sideways movement, very similar to the dollar one. This is looking a little bit like this. It's a declining wedge, falling wedge. We could probably be coming up, and at any point we could break and move to the upside here. So we're actually in a pullback, even though oil's pulling back a little bit. That's probably a big mix of this, and we've had our stocks actually go up in a lot of them. So if this is a pullback, I'd love to see what the big move in oil is going to be like this summer with those companies. Very excited about that. Platinum to gold ratio, again, we've broken out of this big downtrend, falling wedge. We're coming back to do like the longest, biggest retest of our life. Maybe not the longest, biggest, but a retest. And I like it here for platinum. Platinum to palladium ratio, ultra cheap, 0.43. And again, the disinflationary period here. We went into a bull market. This is the consolidation period here. For other ones, or sorry, that's the bull market for palladium, and then we had a vast outperformance of palladium here. Oh, sorry, this is platinum. God, what am I talking about here, guys? Platinum did an outperformance here, palladium did an outperformance there, and then we're going to see platinum do an outperformance hopefully anytime soon now. Platinum to silver ratio. Silver's been feeding it to platinum at the moment. It did kind of break through this trend line here recently. What I'm looking for is an outperformance of platinum at some point. I do think that we're bottoming somewhere in this range. This is ultra cheap for platinum in relationship to silver. And no, I would not trade my silver for platinum. I still think that holding both of these are good bets. But I do like platinum right now, and that's the one I would be buying at this moment. Gold to silver, another one. Looks like it's hanging on gold. But I think this will drop eventually. We got to get a little bit more inflation in this system. We need more people to be convinced that the inflation is not transitory and that silver is the spot to be. And then we need the FOMO to kick in where everybody's chasing into it. Hasn't happened yet. It has not happened yet, but it will soon. The palladium to silver ratio, silver is beating palladium. I expect that to compress, which means silver will do better than palladium. I would be looking at silver or especially platinum at this time. Dow Jones Industrial Average to gold ratio. Again, we got it's fighting back up. It doesn't have a lot of strength here. I think this is going to come on down in a stair-stepping fashion and keep rolling over. So I think gold will outperform stocks in this market conditions. We've got the gold to oil ratio. It has paused. Obviously, we've noticed that oil has not been rocketing higher. We are in a pause mode. We are consolidating here in a little mode, and then we're going to break and go lower. We could also be going higher with gold. So gold's going to inflation adjust oil higher. So oil is going to have an incredible move, I think, coming up very soon. An absolute moonshot move. And hopefully you guys don't miss that move. We've got, on the big picture here, we are consolidating, doing a retest move on a breakout of the ratio to the downside. That is ultra bullish. And if we zoom in here, let me zoom in, guys. This is the retest move. We're doing it right now. Whenever you break out, it usually goes sideways for a little bit, and then we break. That is what the markets typically do. So I like it here. I like all the oil and natural gas and energy service companies. Looking at the copper to gold ratio. So here's the copper to gold ratio. We've just been moving sideways in this channel. I think copper will eventually break to the upside, outperforming gold for a short period of time in the middle of the bull market. This is an indicator of where we are in the bull market. Last time we sat here for a little while, just like we're doing, before a move higher in copper. And then we kind of went sideways and broke lower. This was the end of the bull market as copper against gold went lower. So what I think may happen is copper is going to come back, it's going to move up. I think that this bull market still has a lot of legs left in it. We could even have 8 years left or 10 years left or 4 years. I don't necessarily know the length, but it's definitely longer than 6 months or a year. That's my take. And we should see all these unwind and give us information and data about what the market thinks. Copper outperforming gold is a positive thing. We want to see this break higher. Now, looking at some uranium ratios, because we know I got a lot of uranium guys. I myself is a uranium nut, I guess. But we are moving higher here, guys. This is looking really good. And I think that uranium's going to do crazy stuff here shortly. Very shortly. We've broken out of this pattern here. There's the pattern. We're breaking to the upside. This thing goes, guys. You better, I better be positioned for this move because it's going to be epic. Another one, UEX against the S&P 500 against stocks. It's going to outperform that. UEX against gold. It's going to outperform that once it breaks. And then uranium's going to outperform crude oil and probably go back to levels that are seen up here. You know, a 2. What does that mean? It means that uranium is going to outperform oil by a factor of, I'd say, a little over 2 to 3 times. 2 to 3 times. So that's what my expectation is, guys. This is going to be a big bull market ahead of us for uranium. Looking at some of these other sectors, this is like the lithium. Lithium's just been going vertical, guys. Lithium has been going vertical. Massive moves there. The rare earths have also been doing very well as well. And this thing looks absolutely fantastic. I'm not going to go over the overall market. I'll do that in another clip. Here is the lumber prices. Lumber, again, you know, we're just kind of moving on down a little bit. We're coming to support. You can see that little wick at the bottom here. It looks like support's going to try to hold. We'll see what happens. Nickel, this thing had a massive bull market run. It's consolidating at the moment. Could this be something where, oops, could this be something where we kind of create a big flag pattern or something? Maybe. We'll see what happens. Palladium in dollars, just moving, stair-stepping lower. I would not be in palladium. I think it's going to go lower. Platinum's the one I'd be in. It's going to go higher. Looking at this is cocoa futures. I'm going to back out on some of these, get big picture views. We've just been bouncing here, bouncing in there. Looking at wheat's already broken out, had a big wick at the top. It's probably going to do a little bit of a pullback in the short term. Looking at soybeans, it's right on top of its pattern. Going to make new all-time highs, I think, very soon. Again, corn is right there at all-time highs. It's also sitting there, waiting to move. And this is copper priced in dollars. We got a little bloody nose at the moment. We do, but on the daily candlesticks, it's still just trending higher, getting towards that $5 range. Eventually, looking at the housing starts, this hasn't been updated yet. They do this usually in the middle of the month, but we're still going higher with housing starts. Permits were higher too, 1.89 million, I think it was. Inflation still up there. It's below the large long-term trend line. This thing breaks to the upside. We got a different paradigm on that other side of that line. And we've got aluminum here. So here is aluminum. Nice big move higher. This thing probably still has more in it. We might have a little bit of a consolidation period. I can't really see it there. I have a little bit more of a consolidation period before moving higher. But yeah, this looks fantastic too. And I think that's all I've got for the commodity sector. So ratio-wise, guys, the ones that really have my attention right now is oil, uranium, those two. Lithium's got some pretty good moves too. If you can find something that's down in lithium, and I've been looking like heck, I did put some on the Finding Value website channel. That's in the description link below. I've got a lot of really good picks in the oil and uranium sectors, I think. And again, I'm not trying to give the most speculative picks. What I'm doing is I'm getting the best risk reward picks. Some of them that I think have the juice, the juice being worth the squeeze, and it's got a little less risk than maybe like full-on speculative plays. Even though they are full-on speculative plays, they do have assets, I should say. They do have management teams that have done it before. And we've got the valuations on the website as well for the dollars market cap divided by how many pounds they have in the ground and the dollar per pound valuation. So I've got all that information there. I've got some presentations. I got Scott's presentation loaded to the website, so you can view that as well. I'm going to be uploading even more presentations coming up over time, where it's going to continually add value and add confidence to your holdings. It's a great way to educate yourself on the commodity sector. I've got Lassonde curves. I've got all sorts of stuff on the website to learn and instill confidence. And then we have our weekly meetings that you can ask questions and I'll answer all sorts of stuff. And that's where I think people can really progress their learning and training going forward. So hopefully that works out for you guys. Hopefully the portfolios really start turning it on. I've done very well myself. So last year I was up 340%, 360, 340, 315. Those are the numbers that stick out in my mind. I've got 6 different portfolios. Some of them were not that high. Some of them were only in the triple digits, like barely, like 100-something%. It depends on the portfolio, how much I had of energy. I had a lot, my full-on energy portfolio, one of them, and I didn't do it on purpose. It's just how it came out, because that's where I was adding all the money at the time. I have a lot of oil in that one, and that was the best performing one, was my oil and uranium portfolio. That one's done very well. They're up quite a bit this year. I think I'm up maybe 75% or something like that this year to date on some of the portfolios. But yeah, those are my returns the past whatever. If you guys wanted to know, it does take some experience to know which ones to overweight and which ones not. Those are probably the questions I would ask in the question and answer. on the website is which ones am I more heavily positioned into, and I'm going to share that with you guys tomorrow and give you my opinions on that. So yeah, that's what I've got for today, guys. Hopefully you enjoy the clip. Give me a thumbs up, subscribe to the channel, subscribe to the website if you like, and we'll catch you next time. This is Finding Value.